everyone, it is Evan here from the Trade Risk on Tuesday, March 13th, here with a midweek market recap video. We're going to cover all of major markets and the current market environment. So let's jump right into things here with the S&P 500, the SPY ETF, and we're going to look at a weekly chart to start things off here. Every bar on this time frame here represents 1 week of trading. And when we look at this week's bar so far, it is only Tuesday, so there's plenty of trading left ahead of us. But you can see we are down 2 points here on the week so far. That's almost 1%, 77 basis points to the downside. And this was a reversal, sort of the selling pressure stepped in, came in today on Tuesday's session. We did try and push ourselves higher yesterday and today in the morning, but we did see sellers kind of reverse us back and close us in the red. We'll talk more about that when we look at the daily chart. But when we see this weekly picture, all things considered, we are above all rising fast moving averages here. The light blue line and the yellow line on my chart, the 8 and 20 period moving averages are rising, bullishly aligned, prices above them, and we are above all major trend lines here on the weekly time frame. When we look a little bit closer though, when we look at this week's trading so far, we do actually have the potential to put in an outside bearish reversal bar that tells us that we opened cleanly above last week's highs. We tried to push up, we failed, we went back towards flat on the day, and then in fact, or on the week, and then in fact move red on the week. That gives us what could potentially be an outside bearish reversal week, depending on how we close on Friday. Again, there's plenty of trading left. And in fact, if you want to take it one step further, which would be a very bold call, we could actually have a bearish engulfing weekly bar form for us, given the fact we opened above, again, last week's highs. And if we were to fall all the way down below 267.61 by Friday, we could potentially engulf all of last week's trading to the downside. That would be a bearish development and a fairly bold one, given the fact we are still well above these lows. So something to keep in mind, but again, not stating that that has to be or even has a high probability of being the case at this point. So that is the weekly picture for us. Let's look at the daily chart. This is where things get a little more interesting, some more levels to pay attention to. So as we said, this was yesterday here, this was Monday, and what we saw Monday was we tried to push higher, tried to follow through to last week's strength. We kind of failed and floundered into the close here and actually closed slightly red yesterday, 35 cents in the red for the S&P 500. And then the bulls were back at it again today on Tuesday. We saw a gap higher and a push back, taking out yesterday's highs, got as high as 280.41 until we saw that strength sort of evaporate. Sellers pushed us back to flat on the session and then moved us into red territory. Almost got a bearish engulfing daily bar from Monday's session, given Monday was such a tight trading range. So we saw a little bit of expansion and volatility, a little bit of selling pressure pick up here in the S&P 500. And again, it is coming at a fairly interesting spot in terms of price structure. And I think, again, that weekly chart, this is the past 2 weeks highs, Friday from the 2nd, the very first week of March there, or tail end of February and into the first week of March. And then the first full trading week of March right here also had those highs right around 278.87, call it 279. And again, you can see the reluctance to break out above the prior 2 weeks highs. And again, on the weekly chart, back to this was actually an inside week here. Doesn't look like it, but it just barely made it because it did close below this bar's highs here. So a lot of jargon, lots of things to think about in terms of price structure. But really, when we analyze this from, really just a simple kind of standpoint here, we have this level, kind of where this arrow is pointing out right here. This is a fairly important marker because it does mark, again, the first week's highs there back here from the 27th, and then we had last week's highs right in here. So we got these two highs, and then we saw price tried to break out, failed, and then came back below it. So this general yellow line here, this is sort of the upper level momentum line in the sand here that I would kind of put in place for the bulls. If we are above this line, that is, a point at which this S&P 500 market is at a point of strength. It's got maximum sort of momentum behind it and the wind at its back, and this would be the bull scenario, or the strongest point at which the bull case can be made is if we are trading above 279. As we come back below it, as we are right now, and finish the day on Tuesday, it's not the end of the world. It's not doomsday here. It doesn't mean we have to collapse, but it does mean that, maybe a bit of a hesitation here is warranted given the fact that we failed to hold these early gains on Tuesday, sold off and closed near the lows. We are still above, say, this accelerated kind of rising trend line, testing it right now. You could go to an intraday time frame to get this a little more refined, this trend line that started from the 2nd of March, where we started this kind of ascent higher here. So you can see we are kind of testing that, and we are above the fast, bullishly aligned, rising 8 and 20 period moving averages here. So we are still above those two. We are pulling back here. That, generally speaking, is not a bearish event. However, if we do see price start to accelerate on higher volume and come crashing back down, that is not a desirable pullback. That is more of a urgent reversal that we would want to be cautious of. Remember, we also have this gap here from last Friday, which never got filled. It was kind of a gap and go session, so we do have we have an open gap right here. And if you recall from the last couple of videos, this 274 level, 272 to 274, this is still the important sort of major point of control. This is, again, you got the 50-day SMA, which is floating around this area, which I don't have on my chart. You got these 8 and 20 period moving averages. You have a lot of prior supply in here, so there's a lot of technical significance in this general area here, and I'd want to see, again, for bulls to maintain control, to hold above, say, this yellow 20 period rising EMA. That would be the ideal scenario going forward for the bulls. Maybe one more day of pulling back tomorrow, but like to see a reversal, put in some type of higher low, and then start to work back towards these highs. I think that would be constructive. If we just kind of rolled over and cleared down, similar to what we did in this week here, this 3 bars of trading where we just kind of came crashing down, hot knife through butter, through this support zone, that would be the cause of concern. So as it always does, it depends on your time frame. I think for today, this is and again, it doesn't show as well here on the S&P 500. When we start to look at some of the other major averages, it will become more clear. But I think today you probably have your first micro sell signal here from a price action perspective, losing the strength of these highs, breaking below the prior day's lows, breaking back below these prior week's lows. This is kind of your first micro sell signal here that we've had in a decent amount of time, or at least the past week or two of trading here in the S&P 500. So it's something that aggressive sellers could latch onto. We did put on a short today ourselves. We'll talk about that in a moment, not in the S&P 500. So that is something to think about. When we look at the IWM, we're really going to go right to the Qs here because this just paints that sort of bearish picture. Is notice today here on the Qs, it's had a magnificent run over the past 7 days. I think it was up 7 or 8 days in a row. It came back to earth today, 1.36%. Notice it did come back on higher volume. So we saw an uptick in volume. We saw a clear bearish engulfing daily bar form here in the Qs. And, that is, again, something to take notice of because this is the first sort of round of selling, or, some people would consider this a distribution day. This is the first day that we've seen that going back for about 2 weeks now, ever since we started this run back here on March 2nd. So it is something to pay attention to. It's something that, again, would mostly require follow through. If we started breaking below 171, this area right here on my chart, these are the highs back here from February, the highs back here from January. If we came crashing down below 171, that to me would be a point at which this market is proven to have a possible sort of false breakout and some more technical weakness setting in, and that would cause me a bit more concern. If we rebound tomorrow, if we, again, start the day a little bit weak and we find some type of reversal and we close strongly, we could look at that as a potential successful retest. So this 171 level, how that acts going forward here and into the close of the week is going to be very interesting, very important. You can see this is what the weekly picture looks like if we suddenly started come crashing down back below this 171 level. That would not be ideal for the bulls. IWM, if we look here again, this has been another point of strength here, a bit, not quite or very close to being a bearish engulfing day, but didn't quite get below those lows from what it seems. Missed it by 2 cents, but you can still see same kind of thesis here as we opened up higher, failed to hold those gains, and sold off. We're still well above the 8 and 20 period volume, not so heavy like it was in the Qs, so not as much concern here. Again, a little bit of a pullback given how much ground it covered. Seems reasonable. Let's see if we get follow through tomorrow. Let's see how much, if this pullback does turn into something bigger. We'll start to measure that, look at the levels, look at these fast rising moving averages, and then for the IWM, I'd say, really back down here around 155, 156 or so. That's going to be the important, larger sort of intermediate term level that I'd be paying attention to. As long as bulls can keep us above there, I think they can do some constructive kind of sideways chopping around. The Dow Jones, which we don't talk about much, here is where we put on a short today in the Dow, and really it's that weekly picture that I think sets this one up fairly nicely at understanding the sort of short thesis here. But if we look at this weekly time frame, you can see for the past, well, now currently I'm working on our 6th week, we have been unable to hold very cleanly above this 255 area. We really had this brief stint here where we got this wick up here, but ultimately we closed below it, and really we haven't been able to make any successful progress above 254.50, 255 area. And the short that we put on today is basically looking at this to to hold. So we're looking at this 255 area. If we start to rally back above here, that would be our exit point. If we can maintain below here and start to roll back over, then of course that is the desirable action, and we would look to scale some profits out towards the lower end of this range. This is not the only position we have on. We have long positions on right now, so it's not an outright super bearish call in the market, more so a tactical short opportunity here to get some downside exposure, balance out the portfolio a little bit with some of those existing longs that we have on. So the Dow is the weakest of the major averages. That's why we chose it to be to leverage our short thesis there, and that weekly time frame sort of shows the nice clean technical structure that we're trading against. So that's the market environment overall, I'd say. With all major indices turning red on the week today, I think the sellers finally, aggressive sellers, do finally have something to latch onto. If you want to take your shots, I see the merit behind that from a price action perspective. But again, when we look here at the slightly longer term, we still are above rising 8 and 20 period bullishly aligned moving averages in the S&P, in the IWM, and in the NASDAQ 100. So we do have still, again, the technical structure that does favor the bulls. That can change quickly though if we start to get follow-through days of selling, continuing this market lower. Then suddenly some of those levels will become will certainly become under pressure. The other interesting thing to take note of this week is that we do have quadruple witching. So we do have basically lots of options contracts expiring the end of this week, and that generally speaking can cause some interesting anomalies in price action, some erratic behavior, some chopping around, some movement in extremes one way or the other. So do keep that in mind, that we do have quadruple witching later this week. And finally on the VIX, the one thing I'll note this on the action today is, even though we did see some good selling pressure today, not 65 bips here in the SPY, but mostly here in the Qs, 1.36%. We look at something like the semiconductors, which also saw some good selling on some heavy volume. Take a look at semis. I think this is an interesting loud day to take notice here in semiconductors as well. Almost double the volume, bearish engulfing bar. So take note of that. But while we did see some selling pressure come throughout the market, the VIX didn't really jump all that much today. It was up about 7%, back up to almost 17 handle, getting back above the lows here, or this pivot low right around 1550 from the tail end of February. So not a huge jump, given the fact that we saw almost a 1% down move across all the major averages. So a little bit subdued action from volatility, maybe a little quadruple witching influence there. I'm not going to make too much of it, but it is something to take notice of. So that, I think, is the market environment overall. Gives you some levels to pay attention to going forward. Let's get through some of these other major markets. We saw TLT rally today. We look here on the week, it's already up 1% back up to the top end of this range. It's been flat and sideways for about 3 to 4 weeks now, trying to get some upside momentum here. Slight uptick in volume over the past several days, but nothing heavy. So looks like buyers are trying to break that out to the upside. We look at metals next here. You can see gold getting a little bit of getting a little perky here above the prior 2-day highs. You can see up 20 cents in the GLD ETF. Still very flat 8 and 20 period moving averages, but it is constructive to see we are trying to hold in above this 125 level. Maybe put in a bit of a higher low here after this nice move up. Pull back down, and then if we can start to rally back up above these moving averages, above today's highs, I think gold is in a pretty good shape to rally if it can hold in from these recent lows. We still have a position here from this day here on the 1st is when we got long GLD. We're still holding it. See if that starts to work more in our favor. Silver, kind of similar situation. It's trying to base out, trying to hold in at this 1550 level. It had this nice push up, pulled back to a lot of this supply in here, and it is kind of just basing out, going sideways. So they, especially silver here looks like it's fueling up for a range expansion to the upside one way or the other. Does tend to look like it wants to lean bullish here, but we still need to wait to see that breakout actually happen. Nothing that I am interested in front running or playing at this time. If we go to oil next, you can see this is kind of still chopping around here, maybe in this downward kind of channel, just underneath the 8 and 20 period, respecting this upper trend line here, respecting maybe this lower trend line, and just really some of the lows here from this $12.15 range. So until we get a little more expansion there, not too much interesting going on there. We did see a wide range today, traded all the way up to about 1250, failed, gave most of it back, turned red. So a bit of maybe a more pessimistic view here in the short term, especially if we start to take out these lows right around 12.15 or so. I think the sellers very much be in control for possible continuation lower. And then we have natural gas, which is quietly grinding itself higher. It's been really compressed here in ranges, but you see you've got this slight sort of upward drift. But if we look at the lower pane there, volume has been fairly non-existent over the past couple of weeks of trading, but it is very slowly kind of meandering itself higher. So not too interesting from my perspective, but something in the short term that at least is heading up and respecting some of those tighter, shorter, quicker moving averages. So that is, I think, all I wanted to cover in this midweek video. So hopefully you guys are doing well. Thanks so much, as always, for tuning in and watching this video. If you do like it, do subscribe to our YouTube channel. Every Tuesday and Friday, market recap videos just like this are published. So thanks again, and talk to you guys on Friday.